Of course, Jeremy from Financial Education is miserable these days. At least that's what I heard in one of the videos, that he looks pale, depressed, and everything is going against him. No surprise here. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a website dedicated to microcap stocks which are ignored and underfollowed by the investment industry. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com, which is a free resource to make you a more intelligent investor. Look, the reality is this: when you have a portfolio of stocks and the prices of these stocks go down for no matter what reasons, fundamental reasons or the stock market sell-off, you're not happy about it, okay? I'm not happy about the fact that my stocks are going down too. But you see, when the stock prices go down, you have to understand the reason why they're going down. And if they're going down and if the underlying business is doing well, it might be a better opportunity to load up on those shares. But if the underlying business is not doing well, then it doesn't become a good deal. Just because a stock is down 90% doesn't mean it's cheap, okay? And just because a stock is up 10x doesn't mean it's expensive. It's all about the underlying fundamentals in relation to the stock price. So now going back to Jeremy from Financial Education, I saw a video that talked about how he's, not happy. And look, of course he's not happy. I'm not happy my stock prices are going down. His stock prices are getting absolutely destroyed. But you see, he keeps telling people that this is transitory. And I don't know if it's so transitory on a lot of his stocks, because you see, if you follow me for a while, I made a playlist on why I hate the mining stocks. And if you go through the playlist and you go through these stocks that I talked about, they got absolutely decimated, okay? It didn't matter what the price of silver, the price of gold was doing. They got absolutely decimated, and people lost money permanently. Because when the underlying businesses or underlying assets don't deliver, value investing works very well. They go to zero or they go down and they never recover. You see, stocks go up for two reasons. Either the business becomes more valuable over time and then the stock price follows, or people just get excited about the story. There's a lot of liquidity in the system and the stock prices just go up just because they go up. And over the last 5-6 years, something like that, stocks went up for liquidity reasons, right? The Fed was pumping money into the system. Nobody really cared about the fundamentals. And this gave birth to people like Cathie Wood, Jeremy from Financial Education, Meet Kevin, all of these people that didn't care about the fundamentals. They just bought growth. Anything that had a pulse, they bought. The stocks were going up. They looked like geniuses. And now they got absolutely devastated, destroyed. But that's because, for two reasons. The Fed pulled the liquidity out of the system, right? Raised the interest rates. And now people care what it is that they own in their portfolio. And those businesses that are underneath those stocks are simply not great businesses. I mean, think about those two companies that Jeremy talks about, a Tattooed Chef and Honest Company. So think about this. Let's say I'm selling phones, right? I manufacture phones and I sell them through retail locations. I sell this to a retail location for $100. The retail location resells it for $200. So my price is $100, okay? It costs me $90 to make it. $90 to make it. So I make 10% on each phone, right? That's just on the cost of production. And then I have to spend all this money on marketing, general administrative, research and development, and all this, right? Does this sound like if this was a private business, does this sound like it's a great way to get rich? Sell something for 100, make it for 90, and spend another 200, 300 for marketing. Does this sound like this is going to make me rich? If you're logical, I don't think so. You know what makes you rich is you make it for 100, you sell it for, you sell it for 100, you make it for 40, you spend 10 on marketing and administrative, you sell millions of these, and then you make 50 on each. That sounds like a recipe to make a lot of money, not the other way. And you see, that's what Tattooed Chef is. They are in a lot of stores, okay, selling the stuff at the stores. I went to the store, it sells for about $6. So Tattooed Chef is probably selling it for $3. It makes it for $2.70. So they make 30 cents per one package, and then they have to spend all this money on marketing and all this. So if the economics are like this, is it a good idea to put it in more stores? Well, not in my opinion, because every new store that they put their products in, they lose more money. That becomes like a liability. I don't want to be in more stores because I don't want to lose more money. So now that the Fed pulled the liquidity out of the system, what do you think is going to happen to something like Tattooed Chef? Okay, let's say they go into more stores, they lose more money. And so at some point they run out of cash in the bank. Who do you think comes up with the difference, right? It has to either come from debt or equity. So let's say they don't want to add on more debt because then they can go bankrupt. So somebody has to write a check, okay? And when I'm hearing some people, no problem. They're just going to, print more shares as if it's just an entry in a spreadsheet. Oh, we're just going to create more shares and no problem. We're going to get more money. Who do you think is going to write that check? Like, have you ever tried raising money for companies? I did. I raised about $30 million for companies over 10 private placements. You know what has to happen in order for somebody to write a check? They have to have good business prospects. I mean, think about this. Let's say Tattooed Chef came to me and said, hey, can you raise us $100 million because we lost $200 million last year and we need another 100 because we want to put our product into more stores so that we can lose more money. Like, do you think that's going to go well? The Tattooed Chef comes up to me and says, hey, we have these packages. We sell them to the store for $3. It costs us $2.70 to make it. So we make 30 cents per package. And then we have to spend all this money on marketing and administrative to put these things in the stores, but we're going to put it in a lot of stores. And you know what? At some point, we're going to get a little bit better with our manufacturing. We're going to increase our margins a little bit. Maybe from 10%, we're going to increase them to 20%. So in other words, when we sell it for $3, instead of it costing us $2.70 to make it, we're going to make it for $2.40. So instead of making 30 cents, we're going to make 60 cents. But at some point, when we become big enough, we're going to become profitable. Are you going to write the check for a private placement like this? Honestly, answer this question. Are you going to write the check for a private placement like this? I don't think so. I don't think I could raise money. I recently raised $1 million for another company, and I had to lower the price so that the potential dividend yield is 80%, 80, not 18, not 18, 80%. Okay, whether they will deliver it or not, it's a completely different story. But these are the numbers that we had to go through in order to get this done. Now, do you think Tattooed Chef is even in the same category of what they can deliver? I don't think so. So what do you think is going to save What can possibly save a company like Tattooed Chef? Well, I don't see how the fundamentals are going to do it. Like the fundamentals didn't do it for the gold mining stocks. And when the fundamentals didn't do it and they kept losing money, guess what happened? The capital dried up, the stock went down. And when the stock went down so much, they couldn't finance more drilling, more losses. And then the stock never went anywhere. People lost money. Case closed. The only thing that's going to save Tattooed Chef or Honest Company, which is a little bit better, but still it's operating in a horrible industry during the time that inflation is rampant, they can't control their costs. The only thing that can save those companies is either they deliver fundamentally, okay? They deliver fundamentally and they become profitable, which I don't see this on the horizon, or the Fed inflates the bubble again, lowers the interest rates during this time, and everybody starts doing what they did in 2020. I don't know what the probability of this is, but there's only two scenarios. They fundamentally deliver. You tell me what the probability of Tattooed Chef and Honest Company are fundamentally delivering. I'm not going to say one way or another. You tell me in the comment section below. Or the other possibility is that the Fed injects the liquidity into the system, everybody starts not caring about fundamentals again and start acting like they did over the last year before the bubble popped. What's the probability of that? Again, I'm not going to say one way or another. You tell me in the comments section below. So if you think that Jeremy is unhappy with what's going on right now, he should watch my Why I Hate Mining video series, because that's what's probably going to happen to most of his stocks. And maybe he will create his own video series, Why I Hate Unprofitable High Growth Trash. That's most likely what's going to happen. So anyway, with that being said, thanks for watching, and you know what to do. Subscribe, like the video, share the video, and of course leave me a comment. Thanks.